I bought a £150,000 Lamborghini with just 80 pounds of Bitcoin. That's what Peter Saddington, a computer coder from Atlanta, said for the media. The guy waited for 7 years as crypto exploded 320,000%. Investing in crypto can really help to generate big profits, but if you're new in the crypto world, it could be tricky and complicated at first. That's why I'm here to tell you the best tips before investing in crypto. Let's not wait any longer and dig in. Okay, let's start with the basics: Bitcoin or altcoins. From its creation in 2008, Bitcoin had ups and downs, but despite that, its price was constantly rising up. Even if you take price fluctuation from 2013 to 2022, it raised 40 times. From $1,000 to around $40,000. Now that's what I call a good investment. So Bitcoin is very likable among long-term investors, because they believe that Bitcoin's worth is going to grow even more as time goes by. Experts suggest that later this year, 2022, Bitcoin's price will skyrocket and reach $100,000. History shows that Bitcoin manages to do that really successfully. Now, altcoins are everything in crypto that is not Bitcoin. So examples could be Ether, Polkadot, and so on. In some extreme cases, their prices can even go as far as 50,000% up. Now imagine what a dollar can do with those. But if we look into Luna, that went 11,000% up and crashed to zero. It means it's less trusty than Bitcoin. Looking into altcoins, they have the same goal: to utilize blockchain technology or be a better cryptocurrency than the previous ones. Or sometimes, project creators want to create opportunities for profit. Taking this into account, an important thing you should evaluate yourself is your risk tolerance before buying any crypto. If you're not tolerant to volatile markets, you should leave crypto as soon as possible, because even Bitcoin and Ethereum are volatile. But the ones who stay in the game usually divide into two types of investors. Hodlers are the investors who buy crypto and just keep it for a long time and maximize their profits. Usually they are those who are investing in Bitcoin because of the Bitcoin features I've mentioned before. Or, there are traders who invest in crypto for a short-term run. They track crypto price fluctuations and decide when to buy and when to sell crypto. And that's how they try to make profits fast, and it's usually with altcoins when their price can go up 10 times in a very short period of time. So what exchanges should you trade on? There are two types of crypto exchanges: centralized and decentralized. Centralized exchanges are more beginner-friendly, as they do more for you. But you should keep in mind that there's a middleman. Now, two exchanges that you should know: Coinbase and KuCoin. Coinbase is effortless to use, due to the platform's functions, easy-to-use app, variety of fiat currency, and so on. Coinbase has a partnership with Apple Pay, so this feature only makes the whole exchange process easier and convenient for the user. You don't have to think about additional steps such as creating a crypto wallet and connecting it to the exchange platform. The drawback is that Coinbase charges a flat 1% transaction fee on all cryptocurrency transactions, so that's quite pricey. Compared to KuCoin, this exchange platform has fees from 0.0125% to 0.1%. KuCoin also has a huge number of altcoins options for users. You can stake, trade, and exchange your crypto there. KuCoin might not be the best for the very beginners. KuCoin requires another exchange platform to make a deposit, which can become complicated if you're just starting. Examples of decentralized exchanges could be Uniswap or PancakeSwap, which operate without central authority and are the most popular platforms. Decentralized exchanges are also known for their lower transaction fees. However, they are pretty complex to use, so you also need additional steps to make, learn, and understand how it works. In the end, which exchange platform to use, it is your decision to make after researching on your own. So, that's all about exchanging platforms. And now I want to tell you about 4 examples of potential crypto portfolios. First one is 50% Bitcoin, 50% Ethereum. This is the portfolio you can make if you want a less risky option. You should keep in mind that such a portfolio is better for long-term investment. Patience is required as prices of both Bitcoin and Ethereum still fluctuate quite a bit every day. Second portfolio can be made out of Bitcoin, Ethereum, which would make the biggest part. The other part can have a bit of Cardano, Polkadot, and Chainlink. So Bitcoin and Ethereum would again be the safer part of your investment. And smaller portions of altcoins would be a little bit more risky, but more potentially profitable. Third portfolio can be made out of more altcoins, still keeping major parts for Bitcoin and Ethereum. Then, you can invest evenly in Cardano, Polkadot, Chainlink, and add Solana and Ripple in the smallest proportion. In that way, you will also stay grounded with Bitcoin and Ethereum, but you'll have more options to generate profits. The fourth portfolio can be made of everything in even parts. Let's say 10% of each. I mean Bitcoin, Ethereum, Cardano, Polkadot, Chainlink, Ripple, Solana, Polygon, VeChain, and Theta. This portfolio example is less safe. It might require a lot of work and dedication. If you're a beginner, I personally wouldn't recommend this type of portfolio for you. Probably the main risk about crypto is its volatility, as I've said before. That's why you shouldn't invest money you need for your living. In other words, invest the amount of money you allow yourself to lose. Another risk, crypto can be hacked. It is because of newer projects. They are more vulnerable to hackers, so before investing in a new project, always consider this risk. So, act smart. I hope this video will help you to get started. And, everything you've heard here, keep in mind that I'm just a doge, not a financial advisor. So don't forget to do research on your own. Subscribe and press like on our channel. See you in the next crypto summary video. Bye.